Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday the 28th of January. It looked earlier on, as the European session was just taking over, it looked earlier on that there was going to be a bit of a turnaround in sentiment. It's just been undone, actually, as the Europeans have taken over. Seems as though the coronavirus, I mean, it's going to be a big factor for markets in the days and weeks to come, I think. But how the market begins to price the whole situation in is going to be interesting because, as I said, it looked initially today as there was signs of stability. We saw bond yields actually holding up above 1.6% on the Treasury 10-year. But as Europeans have sort of taken hold, we've really pushed those yields back lower again. Look at this. The 3-month 10-year spread briefly went below zero again. So that's inverting the yield curve once more. And that has been a sharp move that we have seen. It's interesting that the dollar continues to hold up in this situation. Safe haven bias there. And initially we saw this morning the yen was losing or giving back some of its gains. That's undone again. We saw gold, which was quite strongly lower, about $4 or $5 lower, but now unwound that. We saw equities in the European space, which on the futures at least, they looked as though they were going to be having some decent rebound gains, but that's unwound as the S&P 500 futures have unwound. So it's interesting that all these gains that we were seeing earlier, again, oil price had been looking to be supported, but now is back around the day lows. All those gains have started to dissipate once again. VIX volatility up. The Chinese yuan initially back around the 696 level, but that's weakened once again. So all these turnaround plays that looked as though that they were starting to hold have now lost their momentum once more. And well, it doesn't look all that great if that is the case, because it certainly looks as though that selling pressure is still the name of the game, and this little rebound has been sold into for now anyway. So interesting moves that we've got on the markets today. Now, in terms of data points today, we're looking very much US focused this afternoon. We've got the US durable goods orders numbers. Ex-transport 0.2% positive after a decline of 0.1% last month. I say last month, in November. And then at 2 o'clock, we've got the Case-Shiller home price index, house price index, at expected to improve actually to 2.4%. And then we're looking at the consumer confidence, which is going to be the big number of the Conference Board's consumer confidence. Is it actually expected to increase to 128 from 126.5? But it'll be interesting to see if this coronavirus does actually start to take a hold of that and maybe impact to the downside. We've got the, sorry, that's Eurozone consumer confidence, US consumer numbers. After 2 or 3 months actually of not doing a great deal, it's expected to tick up, but if that disappoints to the downside, you could quite easily see that we see that falling over. So it'll be very interesting to see how that plays out. And the Richmond Fed composite index, which I can show you actually, the numbers there from the various ones. Richmond Fed is the blue line, which is slightly below zero, but expected to just increase to -3. So yeah, just around about where we saw the recent numbers anyway. Okie dokie, let's take a look at my chart of the day, which is Euro Yen. Now, Euro Yen has been declining quite sharply. The yen has been gaining strength at the expense of the euro, certainly, and the euro being hit also by the ECB dovishness, which was came out through the ECB meeting last Thursday, and we've subsequently seen an acceleration lower. But not only that, we've broken below that key reaction of 120.15, now below the 120 figure level. So that now breaks a couple of support levels there, 120.15 and around that 120 big figure level. It certainly seems as though that the market is beginning to sort of pull to the downside, and you can see that the fact that we've broken those two reaction lows, we've got momentum indicators which are turning correctively configured. RSI 33, that's not been at that level since September. The MACD lines have bear crossed and are now accelerating, and they're set to go below neutral. Stochastics are also in a similar vein there, looking to go below. Looking to go below the 20 mark. So it really does look as though that what we have is the downside pressure beginning to take hold, and selling pressure, I think, means that rallies are going to be struggling. You can see that throughout the last few sessions. You had a downside gap yesterday, which was actually filled at 120.40, pretty much almost to the pit, filled before falling away again. So that's resistance initially. You can see that on the hourly chart where we had that breakdown. We've got old support, which becomes new resistance. That's a fairly consistent theme through this selling phase. And just in the last few minutes, actually, we've started to again break down on euro yen below that 119.80 level, 119.85. You can see here the hourly chart indicators consistently bearishly configured on the hourly RSI, failing in the 50 to 60 area. MACD lines again set to cross lower below below neutral, and stochastics also rolling over. So selling pressure is growing. The next support comes in around that 119.25. You could argue 119.65, but certainly 119.25 is your next target, I would say. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.